Very good morning to you. Today we will complete the previous lecture related to accounting for hotels. We will complete some terms related to hotels, related to accounting for hotels. For example, fixed expenses or investment factors. The last expense category on the consolidated profit and loss is the fixed expenses, also known as investment factors or overhead expenses. So we have synonyms here: fixed expenses, overhead expenses, investment factors. These expenses are constant or fixed and are generally not affected by hotel volume levels or activity. Regardless the hotel volume levels, the hotel has to charge fixed expense. Fixed expenses are constant. Overhead expenses are constant. They are the result of contracts, bank loans, fee, some taxes, and insurance policy. Often these costs are determined for the year and spread over each month in equal amounts. Examples of fixed accounts are lease expenses, bank loans, insurance cost, license and fees, and depreciation. These are examples of fixed accounts: lease expenses, bank loans, insurance cost, license and fees, and depreciation. Hotel management has little ability to control these expenses. The same as we did study in the third year when you did study cost accounting. Management has little ability to control these expenses. They are already set and have to be paid for out of hotel revenue, regardless of whether the hotel is having a good month or bad month. Whether the hotel is having a good month or year or a bad month or year. The management has little ability to control these expenses. They have to be paid. Whether the hotel is having a good month or a good year, or a bad month or a bad year. These fixed amounts can be large and difficult to pay unless the hotel is operating at high levels. During slow months or low seasons, these amounts remain the same or fixed and must still be paid. These are the difficult times for a hotel. However, when a hotel is busy and revenue and profits are increasing, these expenses don't go up but remain constant or fixed. So when the hotel is doing well, fixed expenses are more easily paid and should result in higher profits. When the hotel is not doing well, there is less money available to pay the fixed expenses, and this eats into profits. As I did mention before, that you did study in depth the idea of fixed expense or overhead expenses during the third year in the course of cost accounting. The same idea. Here, the same idea as you did study before. Hotel profit levels. Hotel profit levels. We have different levels for hotel profit. There are several levels of profits in a hotel, each measuring a specific aspect of hotel performance. Measuring a specific aspect of hotel performance. Each executive committee member is responsible for specific departments and performance. The profit terms can change from company to company, but the concepts and formulas are the same. We will discuss department here, the different levels of hotel profit. Firstly, department profit, total department profits, house profit, net house profit, and the profit before and after taxes. Department profits, firstly. So we have five levels of hotel profit. Department profits, total department profits, house profit, net house profit, and profit before and after tax. Firstly, department profits. The formula for department profits is revenue minus expense equal profit. Matching revenue with expense to calculate the profit. The consolidated profit and loss records the revenue and the profits for each operating department. The resident manager or director of room operations is responsible for room department profit, and the director of food and beverage is responsible for restaurant, beverage, and banquet department profit. The executive committee member, along with her or his management and hourly employee, can control or direct all the revenue and expenses for the. So the point here that department profits can be calculated by matching revenue with expenses. And the resident manager or director of rooms operations is responsible for room department profit. The director of food and beverage is responsible for restaurant department profit and beverage. So we can calculate the profit of the department by comparing revenues of the department with the expenses of the department. And it can be done by the manager for each department. Total department profits. The formula for total department profits is adding up and totaling the department profits for each operating department in the hotel. Total department profits. So we will adding up and totaling the department profits for each operating department in the hotel. The total department profits amount identify the total profit dollar produced by the profit centers, and in our example measures the management performance of the resident manager and director of food and beverage in maximizing the profits for their departments. Total department profit is the dollar amount available to pay all other expenses. Total department profit is the dollar amount available to pay all other hotel expenses. When we adding up and totaling department profits for each operating department in the hotel, we calculate total department profits. House profit, also called gross operating profit. Gross operating profit. The formula for house profit is total department profit minus total expense center cost. The equation to calculate house profit is total department profits minus total expense center cost. The expense center costs represent the other costs incurred by the staff department to support the operating departments in providing products and service to the guests. House profit is an important profit measure. Because it identifies hotel management's ability to maximize revenue, control expenses, and minimize profits. Maximize profits. So, house profit is an important profit measure. Profit measure. Why? Because it identifies hotel management ability to maximize revenue, control expenses, and maximize profit. It's the hotel profit measure used to calculate management bonuses because the management have the ability to affect and to control procedures and activities to maximize profits and to minimize the control expense. House profit also identify the profit or dollar amount hotel operations turn over to the general manager to pay hotel fixed cost. New term, net house profit, also called adjusted gross operating profit. The formula for net house profit is house profit minus fixed expense. So each point we study, it depends on the previous point. Each term we use here, it depends on the previous term. So net house profit depends on house profit. House profit depends on total department profits. Total department profits depends on department profits. So net house profit, also called adjusted gross operating profit, the formula for net house profit is house profit minus fixed expense. This is the dollar amount or profit that remains after the hotel has recognized all revenue and paid all operating and fixed expense. It's the profit amount the hotel has produced that is available to pay all applicable taxes and to be divided among the hotel owner and hotel managers based on management contracts. Ownership accounting is important because it identifies which fixed expenses, revenue accounts, and tax will be paid by either the owner, the management company, or any other investors or business entity that has an interest in the hotel. Profit before and after tax. Tax are the last expense the hotel must pay. Last expense. Taxes are the last expense the hotel must pay. The term profit before tax refers to the final dollar profit that has recognized and accounted for the hotel revenue and expense. This includes the payment of several operational or sales taxes. The final expense is income tax, corporate tax. Profit before tax is the profit amount that is subject to corporate taxes. Profit before taxes. Profit before taxes is the profit amount that is subject to corporate taxes, income taxes. The corporate tax is calculated and paid, and the remaining amount is profit after tax. This is a final profit amount that is divided among any owners and management companies involved in operating the hotel. Thank you.